Hello learners. In previous session, we have seen that how to do horizontal analysis of any company, and we have done the horizontal analysis of profit and loss account of Dabur Limited. Now we will be seeing how to do vertical analysis of profit and loss account. Right. So here you can see I have taken the profit and loss account of Dabur Limited. So quickly we will read the definition. We have already read the definition, I know, but for your understanding, quickly we will read. Vertical analysis, which is also known as common size analysis, is similar to horizontal analysis that can be performed on the same financial document. This is talking about same year. However, financial analysts perform vertical analysis vertically inside of the column rather than horizontal. Right? We will be taking single column instead of taking multiple columns. We will be taking only single column. So, vertical analysis translate figure into financial statement to percentage of a base figure, which is value of 100%. So you have to take base figure, that is value should be 100%. Using percentage can make the data easier to visualize and understand. So if you see here, so we have to take base data. So obviously gross sales is going to be the base data. So you can take net sales or gross sales as a base data, right? So here sales is going to be base data, that is 100%, right? Now I will be calculating this base data. So here, instead of taking gross sales, I will be taking net sales. Net sales will be providing you better result. So I will be taking net sales. You can ignore gross sale because from gross sale we reduce excise duty and some other kind of taxes, right? So net sales I will be taking as a base figure. Now I will be checking that from net sales what values are varying, what other values are varying here. So here, if I see increase or decrease in stock, so here I will find out the weight of stock here. So divided by this value, so you can see the weight of stock is this much. So I will freeze this data, right, in percentage. If you see, so it this value is in negative just because if you see this value 177 is negative value. What is the meaning of increase or decrease in stock? It is the difference between opening stock and closing stock, right? So if closing stock is greater, so you will get negative value, right? So that is the reason here we are getting negative value. And if I copy this data, so we will see that what values we are getting. So if you see the total of expenditure, total of expenditure is 78% of total sales. Further, what I will do, I will copy these values for a better result. So if you see, we have copied these values here and we will try to find out. So this is your base value 100%. And further, if you see, so raw material consumption is 43% of total sales, right? You will be able to understand raw material consumption is 43%. So let's suppose if your sales is of rupees 100, so 43 you are investing in raw material, right? Further, if you see employee cost is norm 9% of total sales, right? Other manufacturing expenses are 12% of total sales, right? Similarly, you can see selling and distribution. Company is investing a lot of money in advertisement and selling of product, right? So that is 11% of total sales, right? Further, if you see total expenditure is of rupees is 78% of total sales. It means company is selling product of rupees 100 for which company has to incur 78 percentage or 78 rupees, right? So total margin will be how much? Margin will be 22%. This is your profit before interest and depreciation, right? Now if you are adjusting this other expenses, so what will be the result? We will see company is earning some other incomes also, and that is 4%. Company might be earning interest, company might be earning dividend, company might be earning rental income. So here you can say other income is 4%. So what is the operating profit of company? Operating profit of company is 26%, right? Here we have seen, if you see, company is having less debts. We have seen the balance sheet where company's total debt is 1% out of total capital, and total equity is how much? Total equity is 99%. So here company is paying very less taxes, right? So the total tax expenses as compared to sales is only 0.13 percentage, right? Which is very lesser amount, right? So if you see profit before depreciation and taxes around 25.44%, which is good enough, right? And if company is charging depreciation, so profit before tax is how much? Profit before tax is 23%. And now if I calculate the profit before tax or PAT, so PAT of company is 19%, which shows net margin. So net margin of company is 19%. which is very good, which is good enough, right? So the company is earning net margin of 14%, which is well enough, right? So if you see here, so we have calculated these values, right? Further, what I can do this analysis for more than 1 year, right? So let's suppose here I'm assuming this year as 100, this gross net sales as 100% base, and I can copy this data here. So I will be changing the value here. Instead of B, I will be taking D. So it will select current year sales itself, and I will copy these values here, right? And further, what you can do, you can compare this net margin for several years. So previous year also, the company was having net margin of this 19%, right? So what you can do, first you can do vertical analysis, and then you can also do horizontal analysis, right? So you can see net margin is 19%, and company is performing quite well. Company is performing quite well. So this is how you can do uh, vertical analysis, and you can find that how much company is incurring for raw material, how much expense company is incurring for total expenditure, how much expense company is incurring for payment of interest, right? So you will be able to compare your expenses with total sales. So this is how we will be doing vertical analysis. Now in next lecture we will be understanding the ratio analysis part, which is most important part to understand. So thanks a lot, guys. Stay tuned with us for more and better learning. Thank you.